Say was like, no.
Yeah, anybody seeing gold on the analysis I gave out in the free Telegram group? Hello, everybody. This is going to be on YouTube, so I'll just let everyone know. I gave out this analysis on gold today. It hasn't done anything yet, but it is the sell trade possible setup. I'm going to go down exactly why I'm looking to sell gold at the moment, or I'm still in my original gold sell from last week, by the way. Um, but why I was looking at gold doing a continuation of a sell basically based on exactly what I taught you in the last two Zoom calls that I have put out on YouTube for people to be able to understand how to trade gold. Cool, cool, cool. So let's just look at this first and foremost. Let me go to the daily time frame so it's a bit bigger. Okay, so when we go over to the daily time frame here on gold, the biggest thing we can see straight away is that gold is daily bearish. It was daily bearish when it broke structure down here. I'm going to go over exactly how I marked out this chart again in another chart after, but first let's just get into it because it could be selling now. So literally, so it was daily bearish here, boom. And then also last week it went daily bearish again on Wednesday with the news release of the Euro CB news. So it was the Euro Central Bank. And then there was obviously USD news as well, because obviously it's not a Euro pair, but that news did affect a lot of pairs in the market, the Euro news. Right now, after that did happen, all I did is bang down straight to the 4 hour time frame. Um, and then I was able to ascertain that there is a 4 hour supply right over here with this bullish candle. And we had a 4 hour breakup structure of this low. Again, I'm going to go over this markup after. So this could be a possible sell setup for gold at the moment. Another thing I've noticed is that just with the 9 o'clock news, which is UK time, there was a fair value gap that was created here in the market where price action has basically given us an indication that they could be doing a reversal move. Most people just look at this as an engulfing candle, and obviously an engulfing candle means there was buy-in or selling pressure on the time frame you're looking at. And this is a 1 hour time frame. You can see how here there was a 1 hour engulfing and it continued to sell. And now we're seeing a 1 hour engulfing here with another FVG here at the moment. So they could either respect this FVG or they could break it. But right now it looks like it can respect it. Why? Because again, when we look at the simple analysis, we go to the daily time frame. We are daily bearish on a daily time frame. We're double daily bearish, as we can see it broke here as well. And then when we go to the 4 hour time frame, we are also 4 hour bearish as well. Well, we might have gone bullish. No, we went 4 hour bullish now. So right now, technically, it is 4 hour bullish, but we're going to pay attention to the higher time frame because the higher time frame could still give us the idea that price action is going to sell. Always pay attention to your higher time frame and you use your lower time frame for entry. So the higher time frame is telling us it's still a sell. Sometimes they do break structure even in the entry time frame in the opposite direction, but it doesn't mean the move cannot still occur. It just means that it might be a little bit more tricky before the move does pull off. So maybe there might be a bigger news event that has to come through to push it back down, and then it could just go and break 4 hour bearish structure, or it might consolidate here for a little bit and then break another 4 hour bearish structure and be 4 hour bearish as well as daily bearish. But again, I pay attention to the higher time frame, which tells us to sell. Price actions come back into this area, so you should technically be in your sell trade now. You've got two choices of where your stop loss should be. Your stop loss would be here. Where are we? Short, long, tall, short. So entering right where I told everybody to enter at this price level here, which again is in the Telegram beforehand. You've got a stop loss that could be here. And then your trade can be looking for your take profit level, which is the previous week's low. To be fair, the previous week's low is here now. I never updated that. So I'll update it later on in Telegram. Is here is the previous week's low. So they can sell it down to this level here now, this level here, and then obviously any other previous week's lows that we can see down here that I have marked out. Basically, these are all previous week's lows, all these target lows. So if they are going to sell now, they might just push it down to last week's low and then maybe want to pull it back up. This is NFP week, so there is a lot of news this week in the market. There's a crazy amount of news. So, I'm just going to do this first before we even go into anything else. What I tend to do with news is I will scroll up, press these three buttons here. So these lines, I'll get rid of medium and low first, and then I'll do this and it will show me all the high impact news for the week. And your main interest is to pay attention to the news event that has, sorry, the day in the week that has the most high impact news. And we can see here on Tuesday, there's quite a lot of news, but when we come into Wednesday, it's going to get scary, guys and girls, so be ready. When we come into Wednesday, there's actually all of this high impact news. I'm still scrolling, by the way. I'm still scrolling, still going down. There's all of this news on Wednesday. So this even gives me a suspicion as to why. What did you say, my friend?
I say, damn,
That's a lot of
that's
news.
a
So
lot.
I'm out of the market at the moment. I'm not in no trade. I'm in gold, but I'm not in no other trades. Like I'm just in gold basically at the moment. But I'm not like looking to enter any positions. Really, I'm looking to see what happens on Wednesday before I probably enter anything because you're gonna see what's gonna happen on Wednesday. There's gonna be a huge breakout for sure. And it's funny that there's all this news because this is the last day of January, which we all know December going into January is obviously going to be lower volatility in the market because of Christmas and New Year. So the bigger players are obviously coming back into the market coming from February. You know, those we're talking about people with hundreds of millions of dollars. They do not need to trade every day. They are not sitting here doing Zoom calls or anything like that. They're on yachts and whatever the weather. So those people are probably more than likely coming back into the market properly in February, and this would give a good indication to what the hell they're trying to do with all of this news. So now, anyway, once you come into Thursday, you can see there's more news on Thursday as well. It's scary, people. It's a very scary week. So you have to be very careful with how you're trading, especially if you're scalping. And then obviously Friday's a little bit more quiet, but we do have NFP on Friday being the first Friday of the month. Every first Friday, there's non-farm payroll, and that comes out every single first, well, not every single, but the majority of the first Fridays of the month. Some months it won't be there, so you have to double check your news forecast the week ahead. But I did check this week, and of course, this is a very, very volatile week. It can be. We're also going into a new monthly candle opening, meaning that the new open of the candle can be used as a supply or demand area. So if the monthly candle obviously starts to go bearish or bullish, they might decide to follow that trend, even if you're already in a current trend. It all just depends. So overall, it's a tricky week to trade. That's what I'm trying to tell people, especially when you get the monthly candle opening in the middle of the week or at some point during the week. That way, you don't know in terms, think of it as a middle line. So think of the monthly open as a middle line like this. Literally, this is the monthly open. And right now, we're bearish on gold. Yeah, we're bearish. We're coming down on gold. We don't know if now with this monthly open, they want to go above this new monthly open that happens. Yeah. And then start buying back up again, you know, for a trend. Or we don't know if they just want to do something like this, even a spike, and then now turn this candle bearish and continue to go down. My forecast from how I look at the higher time frames, so I check from the monthly, weekly, daily, 4 hour, etc. I go up, down when I'm looking at the bigger picture on what gold can do. Now, what we can literally see is that what we've got to wait for, sorry, is to see is if price action is going to spike up like this and then come back down, creating the monthly candle ahead to become bearish. But we have to wait on that to see what happens. Obviously, it's a waiting game. So, yeah, that's pretty much all of that point of it. Like I was just trying to say, I just wanted to go over why we're looking to sell gold. And again, it's double bearish on the daily time frame, and on the 4 hour it is bullish, but we could see the sell. Now if it doesn't respect this area here, this FVG over here, which was a 4 hour FVG, yeah, has been cleared now, so we don't have to worry about that FVG no more. um for there's it's still in a 4 hour supply, so it's in a double 4 hour supply as well. Like I said, on the 1 hour there's a FVG here, so anyone can go draw their FVG on the 1 hour base there. I'll go back over here. So it's whether they want to respect this one or break it. Now, what I have seen being all of that news event, this is why I went to show you that, is that now price action has left a daily FBG up here. So we'll go to the daily time frame. So this is me giving you more of a bigger forecast for the week as well, so you can understand if price starts doing certain things. There is a daily FVG up here, which is the fair value gap. So they never actually cleared this, even though they did decide to continue to sell. So this week, they might actually be in a position where they say, hey, you know what? We're going to go up, clear this one, then we're going to break another daily bearish breaker structure here, and then we're going to sell it. They could decide to do that. We don't know. On the same breath, gold actually went daily bullish. Why did I not see that? Oh boy, it's all this Forex stuff. Gold's actually no, sorry, we're in the no, it hasn't gone daily bullish. My bad, people, my bad. We're in the current candle. I'm looking at this line as a candle. That's why, my bad. We're not daily bullish, but it can close daily bullish if it goes above this area here. right above here, right above here. Boom. So if it does close like this, right there, which is 20, 25.5, around about that area. If it does close like that today, it will go daily bullish. But what they could be doing again is just pulling back into the supply area, and then they could close below this area. If it closes below that 2025 level and doesn't go daily bullish, they're more than likely going to continue to sell. But if what I'm thinking they might do is go to spike the liquidity high of the previous week and then bring it down. But it could be a move like they close below this level today, spike up again with news, grab this liquidity, tap into this daily bearish fair value gap, and then sell. Of course, with so much news, you have to kind of watch the market as it progresses. Nobody's going to give you a perfect entry unless you're session trading and you're literally in on that session at that time. They're about to do whatever move. And again, that still goes with however you perceive your structure on that day or that week or however you trade within that 4 hours, 1 hour, whatever trend it's in. So for now, it's more about a watching game and being patient. Or if you are entering based on how I'm swinging these trades, then you need to be a bit more lower and conservative with your risk. So if you did enter on this level here again, your stop loss would be above this box here, right over here, which is 2036.5, or you would put it above this area here. Now, I don't actually trade with a stop loss. So realistically, my hypothetical stop loss is around here, but I do know again there's a fair value gap here. So as it gets to this level, I'll still be watching it to see what structure they break when it gets to this level. If I see a massive impulsive 1 hour, 4 hour reversal from here, again with another fair value gap, it lets me know that they're looking to push the market back down and we should continue back to the downside. The only issue I would have with that is if they do close above here, it will go daily bullish, but we can see that the market is looking like it does want to sell. So I'll see how it plays out. I'll be playing it. I'm not really trying to trade too heavy anyway, but we'll see how it plays out. But when it gets to this level, you don't have to worry. If anything's happening there, I will obviously let you guys and girls know in the Telegram or in the free Discord. Sorry, in the Telegram, the Discord, or if I do have time, it'll be on YouTube. It just depends on the day and what I'm obviously doing. In regards to what I've said here so far about anything, does anybody have any questions or anything like that on what I've said so far? Just so I know.
Are we just trading the breaks and structure on the daily from the 4 hour?
Yeah, so I'm trading literally. I'm gonna go through that. If you have you watched my other video based on gold by any means, the one I was
Yeah,
in for, you've watched it, yeah?
yeah,
Yeah, so that's all I'm doing. I'm just
yeah,
using the
right.
daily and the 4 hour time frame. So whatever direction it's in on the daily, then I'm looking to trade it that way. Literally so, literally. So if it does go daily bullish, gold can buy up some more. Literally so. But I don't think they're trying to go all the way up to this all-time high. The only way they're going to start going all the way back up here and further is if the news, based on the war that's currently going on, there's two wars, unfortunately. If those news
Yeah,
obviously start becoming more drastic, then of course gold is a safe haven commodity. So therefore it starts to pump like it's almost Bitcoin. It will start to pump because obviously people are putting more investment into gold because it's not a fiat currency. Do you understand what I mean? So that is the only way
yeah,
I think it would go up to here. So that's the type of news, again, unfortunate news you'd want to be hearing if gold is going to be buying. But if it's not, if we don't get that type of crazy, news spikes, then I really do think gold is going to be on its downwards trajectory to start selling to pull back basically before we start going long again. And obviously we'll just follow that footpath. So more than anything, I'm very cautious this week. So if I don't even take any trades or start giving out like, oh yeah, buy now, sell now, you're gonna have to just bear with me because in the end of the day, like I've said, once you're going against all of this, this is a free for all. Nobody, I don't care how good they think they are as a trader, you're not gonna know what every one of these news events are gonna forecast. And remember, this is only high impact news. I will tell you now from all the extra testing I did last night and this whole weekend, I tell anybody that for a fact. Every single news event actually makes sense, not just high impact alone. So any one of these news events, remember that's only high impact. When we start going to add low and medium onto this as well, any one of these news events can literally affect any pair we're trading, obviously, depending on what it could be here or the session itself. So you're going to have a risky week. You're either going to get very lucky if you get a big trade, or you're going to have a troublesome trade and then maybe it gives you a little bit of profit, or you're going to just have a crazy loss. So again, this is one of the things of trading. If you're not too sure, stay flat. There's always another week. I get it. Everybody's excited. It's a fresh week, but you can't control all of this. This is only Tuesday, then we're going into Wednesday. It's crazy, people. I
It's a
don't know what to
lot.
say. It's a
Yeah.
lot of news, people. I don't know what to say. I can pretend to be like, yeah, we're gonna get the perfect trade and everything's gonna be good. And bro, I don't know. Look, it's a lot of news. It's a lot of news. And just because you can have a bias doesn't mean it has to respect your bias. This news, when it gets released, can be the opposite of your bias, is what I'm saying. And when it's the opposite, mad things happen. And I could show you with two of the trades I was looking to take before. So, you gotta be careful. Yeah, it's just the truth. There's a lot of
Hey,
news,
bro.
man. Yeah, it's a lot of news. So, yeah, let me just go into this now anyway. All right, cool. So again, everybody's aware of what they're doing here and what it could possibly do. If it changes daily bullish, it does put it in a little effect of what it could do. But I do honestly think that this is going to sell. I do think it's going to go up and sell. That's what I think is long-term trajectory, sorry, that's the projection for it. It's to sell. So yeah, well, let's just see what that happens with that. Now let's go over to here. So, how did I come to the conclusion of this sell? I don't know if everybody has been here before, but I'm going to do it again just so you can see it. Have we got anybody that's new in here that's only joined me today? Let me know.
Yeah, this is my first time in there, brother.
All right, cool. So, just so you're getting a live demonstration of this and what I do for the strategy, this is a viable working strategy. You can trade on absolutely anything, and obviously your win rate would be dependent on, obviously how price action moves, but it has a bigger win rate than a losing win rate. If we're talking from the 50% fraction, we're looking between 50-60%. The win rate is on average if you're just using the daily and the 4-hour time frame in combination. It's a very simple way to trade, and I would say it's a beginner friendly way to trade for traders because they're in a position where obviously, the majority of us will be working, have family commitments, etc. You do not have to be at the chart every day. I understand scalping is very enticing, but for beginners, I would urge them to stay away from it until they learn how the market actually moves with structure, what I'm going to teach you now, and then you can start to adapt that to whatever time frames you want to do. Completely and utterly up to you. I'm just trying to give you 3 pieces of advice here, you know what I mean, to help traders out in this game. All right, cool. So the first thing I'm going to do is get my path tool. So on TradingView, you need to get this tool here, which is called the path tool. You can find it in tools, literally this tool here. Boom. And if you don't know where that is, you just need to go over here and then you need to go to drawing tools. Sorry, you need to go to brushes and then you just literally want to go to the path tool, which is here, and then put a star beside it. If you put a star beside it and you press this star at the bottom left here, then you're going to be in a position where you've got yourself a favorites tab, like a hotkey. So you can literally just click on any of these and it will come up. So I just click here. And then the next thing I'm going to be doing is yes, I'm going to be basically working out how to see breaks of structure in the market. Now, this is incredibly important so you can understand you're in the right trend on any time frame you're looking at. And anybody that's traded with me in the VIP, especially when we're in trades in drawdown, they can testify to how accurate this is because whenever I tell them if we're in a pair that we want to continue buying or selling, and I'm like, okay, it's broken 4-hour, the opposite direction. What tends to happen after that is we see some type of drawdown that starts to appear. And I might have said this 8 hours ago that, oh, it's broken the opposite direction. Then within the news, within the next 4 to 8 hours or whatever, it goes against us, the news, and then it starts to hold a drawdown. Or if I'm correct and it does hold the structure, the next news comes in and then starts kicking our trade into profit. So I'm just trying to use that explanation so people understand what I'm teaching you here is crucial. I'm telling you, and it's something you're not going to learn every single place, or people will be charging you X amounts of money for this. So again, we'll go into it. Boom. What I want to look for is any single time I'm drawing a break of structure in the market, I need to see that price action. I'm looking for my path tool to start at the top of every bullish candle and the bottom of every bearish candle. Top of every bullish candle, bottom of every bearish candle. You're always counting the wicks. If the candle doesn't have a wick, then the bottom of the body or the top of the body. Sometimes it doesn't have a wick, but if you actually zoom in like this on your candlestick charts, you'd probably find out that candle probably has a little tiny minuscule wick like this one here. You see? Yep. So again, this is what we do. And I'm just going to start it from up here. So we can see here, boom, price action right at the top of this wick. I'm going down to the bottom of this wick. Now, if you've got consecutive color candles in a row, obviously my bearish color is green, my bullish color is gray. We can see that I don't have to now click this path tool at every bottom of this. I'm just going to go all the way down to here like this, boom. Then I'm going to go all the way up to here because I've got a bullish run. Then I'm going to go down to here. Then I'm going to go up to here. Then I'm going to go down to here and then up to here as well. And then down to here again and then up to here and then down to here again and then up to here and then down to here and then up to here and then down to here. And I'm going to stop it there because this is today's candle. So me stopping this to here at today's candle, obviously I don't know whether it's going up or down, so I can't use the path tool anymore. Now what this is doing for me is this is helping me to identify structure in the market because it's showing me where all the swing highs and swing lows are. So all I need to know is any swing high, if a bullish candle breaks that area and closes above it, that is a break of structure. I need the body of the candle to break above there. If a bearish candle breaks below any of these swing lows, which is there will always be a bearish candle, then I know that's a break of structure. So obviously, if we pay attention to what I've just told you there, and we look at exactly why I said gold is double bearish, we can see here in the market that gold has broken this area right over here. Boom. So this gave us a break of structure right here. We can all agree on that right now, yeah? Are we all cool with that? Cool. Let me know. Let me get some typing in the chat. Yep, everybody good with that. Cool. Now, the next thing I've seen here, boom, is gold has also broken the structure here as well, which it did on Wednesday last week. So now we can identify straight away how we've got a break of structures. And can you see how easy that was for me? It was literally this easy, literally this easy for me to be able to do that and to be able to identify straight away where my break of structure is in the market. This is what I use to help me give my confluence to whenever I use indicators as well, which obviously is NEO, the indicator that I use all the time. You probably hear me talk about if you are in my group. So now I can see straight away that even when NEO has this, that's great as well, because it can show me that, okay, there's a break of structure. But just in case, because one of the biggest things, I forgot to mention this as well, for anyone watching, you need to be on Awanda. Be on Awanda. Don't use FXCM. Don't use Forex.com. Don't use 8cap on here. Don't use any of them. Use Awanda because Awanda has the cleanest price action with price opening and closing right beside each other. When you go on other brokers, you will realize there's gaps in between a lot of these candles, and that will knock out of that will basically take your break of structure pathing, the way you path the tool like this, with the ups and the downs, with the highs and lows, it will knock it out of sync. You don't want that. So you have incorrect breaks of structure in the market, which is terrible. So always use Awanda, always use that. And again, why I'm saying this as well, why I do it on TradingView is because my MT4 doesn't have Awanda. So there's different brokerages that prop firms would give you, and sometimes price action can be inconsistent. So just to make sure, because I'm trading a lot of capital, I always do what I'm doing right here to double check price action is in the correct trend, because in the end of the day, I don't care if I have to spend the extra 30 minutes or whatever doing something. It's my money. If you understand what I mean. So I want to be secure with my money. You basically can't be lazy is what I'm trying to tell people. I am updating Neo to do this though, to make it better for people. So specifically mark out all the structure like this for you. So it'd be nice and easy. Yeah, sorry. So I just thought I had something popping on my phone. All right, cool. But now we're going to go into this. So straight away, we are daily bearish, we can see here. So I'm going to get rid of this path tool now on the daily. I don't need it no more. You see how clean this is, guys and girls? Very clean. Once this did happen with a break of structure, the next thing I do know I have is I have a supply that does form. So if my supply forms right here, it's always the last bullish candle if you've got a supply, and it's always the last bearish candle if you've got a demand. Obviously, we've got a supply because it's a sell. So it's the last bullish candle before the breakout. This is the last bullish candle before the breakout, the last bullish candle. Now, what I tend to do to be, you know, this is the John version, I call it, of doing it, just in case price action wants to wick like this and then come back in and sell, yeah, what I do is this. So I make it go to the highest point of that swing like this. And again, just in case price action wants to wick, not even all the way out, it might want to wick like this, grab the liquidity above there, and then sell. This is why I make it to the highest point. And obviously, if it's a demand, I'll put it to the lowest point. So right here, we have a daily supply right here. Daily supply. Cool. Now, with this daily supply being added there, we also have another daily supply that was formed here. Boom. Right over here as well. So price action currently is in a daily supply as well. And you can even see price actions reacting off the 50%. Some people like to call them order blocks. I like to just call them supply demand. I'm just stuck with that, but it could be the same for order blocks for you. It's exactly pretty much the same thing, how they form in the market after a break of structure. And you can see right over here, is the 50% mark. So most times when price action does pull back into a supply or demand, if it doesn't just react straight away, it will pull back into around about the 50% region. It's pretty easy for you on TradingView because you've got this thing here called the middle line. So they're already aware of people drawing supply and demand. That's why they created the middle line for you. So you can just tick that on and it shows you 50% of where the box, from the high to the low of the box where it is, the 50% region. So right now we've got two daily supply levels. Boom, boom, boom. Do daily supply daily. Boom. We've got two daily supply levels, okay? And we can agree on that. Boom. So the next thing I'm going to do is just go down to my 4-hour chart, okay? And on my 4-hour time frame, what I'm saying here, boom, is now we're looking at price action and how it can respect any of these 4-hour breaks of structure. So let's just pay attention to the immediate breaks of structure within this area here. So we're just going to get our path to again. I'm going to do the same thing. I'm going to start from this candle up here. I'm going to go down to the bottom of this bearish candle, up here, down all the way here, up here, down here. It gets a bit tricky when the candles are, whoops, I'm going to have to do that again. No, I'm going to have to do that again. It gets a bit tricky when you can't see the candles because they're small. So let's up here, up here, down here, up here, down here, up all the way here, down here, up here, down here, up here, down here, and so on. I'm sure you're starting to get the gist of all of this right now. At the moment. Cool. All right, cool. So now I want to see where all of my 4-hour bearish breaks of structure are because we're daily bearish. Yeah. So I want to look for that as well. So I want to keep it all in the same trend. So I can find where my bearish breaks of structure are on the 4-hour and my supply on the 4-hour. So I can see straight away when I'm looking at this daily supply area, where was the breaks of structure? I could see there was a break of structure right here with this candle. So I actually have a 4-hour supply here. Let's just do this in a second. Supply 4-hour supply. Right over here. Okay, I'm gonna do that. Boom. It's good that it's a different color. So I got a 4-hour supply right over here, and you can see this is exactly what price action has tapped into right away over there. So it's tapped into that 4-hour supply, which is pretty much around the 50% region of the daily supply as well. And then if we're looking down here as well, we're looking for any other 4-hour supplies. Price action never broke any more lows here. It never broke this low, never broke this low. It never broke, it broke this low here, but this supply wasn't actually held. So it did break this low here. Cool. When was this? What day was this? Friday. Cool. I think we're still holding our swing trade. Where was we? Yeah, we're still holding the trade because there was a trade entry. So we had an entry from here. That's why. But there was one here, right here. I don't want to skip it. There was one here as well. Right there. Cool. You can see our price action now. This is when a supply becomes invalid. You can see how this 4-hour candle broke through this area. So now this supply is invalid. You wouldn't be looking to have this supply here anymore, but there was a supply there at the time, right there, 4-hour supply. Okay. But now again, remember with my markups, you would be in a situation where I would explain to you where you're looking to take your trade setup from. So we had our trade setup based from, I think Wednesday is when I gave it out and I never amended it on Thursday. And our original entries were from these highs here, basically. You can go to the Telegram group and you can obviously see that when we go back to the other chart. Hopefully you still be able to see it. So it was from here. So again, we wasn't entering from when price action came down here or anything like that. We would have never had our stop loss here. Our stop losses would have been at this high here or above this box. Personally, you might as well just put it above the daily box. So that's where we would have been right there. So we're still technically either in this trade or you would have closed when it pulled back down like this during Friday. So yes, this supply here was invalid. So if you were trading off of this one alone, that would have been a losing trade for you. Fair enough. You've got to take your wins with your losses. And here's where your secondary supply is here. So I can see that already. Now, to be fair, you still with me, people? Yeah, still with me. Now I've done all of that. I've found where my 4-hour supply is, and I've got my daily supply right now. Okay. The next thing I'm looking at is straight away is, okay, now I've marked this out. Where is my next daily bullish break of structure? Where is it? Where is it? My next bullish daily break of structure is this level here. So I know that if I am going to enter this sell trade on gold, now this becomes a 50-50 trade. And this is what I tell people. So like today, if you are in this trade right now and you want to consider to probably take some risk off the trade, it's a great idea to do that just in case, because this, again, if it breaks above this area here, we're going to go daily bullish and the market could start to now buy up more before it decides to sell back down. Do you understand? Because we are changing daily trends. So in theory, I would delete all of this and only start drawing demands to look for buy trades going up, literally until it goes daily bearish again, and then I'll start looking for supplies. So right now, if it breaks this level here, this is telling you that this sell trade that you're looking for in the continuation is a 50-50 trade, because literally it just has to do one daily candle the wrong way and close above a level, and now you're changing trend. This doesn't tend to happen often. It tends to happen when they're trying to make a decision in the market, as you can see here, and they start to consolidate the market. When they start to consolidate the market, this is when this rubbish starts to happen, where you get these 50-50 trades. But when they give you a nice trend, as you can see up here, let's just say, okay, let's look at this one here. So there was a bullish break of structure here, and you can see price action just started to buy up and just kept going up. It was a nice trend. So the only way it could have broken daily bearish structure was all the way down here. This is when you've got nice trades and when you can keep catching the retests on the demand areas for continuations of buys, or obviously if it's a sell, the retest for the continuations of sells. But when they do this consolidation, that gives you these, okay, today it could buy, tomorrow it could sell, today it could buy. It's all them trying to make a decision, again, based on whatever fundamental events here. So any one of these events can change the trajectory on the daily chart of gold, mainly obviously USD news, looking at that. Okay. So, boom. So right now, again, this is a 50-50 trade. That's the way I've coined that terminology, because it can break daily structure in the opposite direction. So you can already see how I've drawn my supply demand, how I've drawn my break of structures going from the daily chart to the 4-hour chart. Done that. Just so everyone's cool with that. Now everybody will say, okay, but where's your take profits? So in theory, there's 2 ways you can do your take profits. Completely up to you. I prefer to use previous weekly highs and lows. You can decide to use previous daily highs and lows if you're not too comfortable with that. But I've traded long-term trading for a while now. I started really doing it probably about 2 years, maybe 2.5 years ago, trading long-term for, let's say, about 2 years. And that's just given me a bit more confidence to hold trades. I've held trades through, a week, 2 weeks and stuff like that. So we're expecting our TP1 to be here, which is the previous week's low. Our TP2 to be here if it does continue to sell, which is another previous week's low. And our TP3 would be here, which is another previous weekly low. Now, of course, if you're going to the daily chart and you want to do that, you just got to look at your daily candle. And let's say gold decides to sell. This would be your TP1 here. This would be your TP2 here. And this would be your TP3 here. Right here, basically. It could be this one here, technically this small gray one, or here, you might as well call it that because that's the wick. So that's how you can do it if you just want to trade your previous daily lows. Maybe those are areas you're thinking they might just go to and you want to remove some risk off the trade, break even the trade, whatever you want to do, completely up to you. But I tend to go for the bigger swings. And I've noticed that a lot of the time they go for previous weekly highs and lows, because again, this is where all the liquidity is resting. Imagine how much liquidity is resting from this buy up here. So at some point, they're going to do an aggressive candle move for the sell, and it's going to take out this low. So that's why I do it, because you're obviously going to get the bigger trade. So especially if I'm using a bigger stop loss, I'm looking for the bigger trade. So that is why I use the previous weekly highs and lows, because it gives me more chance of catching a better momentum move. So anything I've just said so far, does that does it confuse anybody? Have they got any questions of what I've just said? Is it clear enough for people to understand how I'm drawing my breaks of structure, my supply demand, and how I'm using my trades for entry?
Yeah, John, I understand completely, brother.
Yeah. Anybody else? Anybody else? Okay, cool. So again, this is why I say this. So if you haven't joined my Telegram group, let me just get that up there for anyone that's new. Give me a second. Okay. Give me a second. Okay. If you haven't joined my Telegram group, which is here, as you can see, right now, this is what I do. So with gold, the same analysis, I post all of these same analysis for free for every single person. Pardon me. I post them up here. So you can see every single week as I've been going on and on and on and on with gold. And I've been doing this since I've been doing it again in this group since about July last year, but I've been doing this since I pretty much started going onto social media with trading, doing gold charts. There's a whole bunch of proof of this. If you go into this is the next one, I'll show people. So nobody can ever be in fear if John is actually here or not here, or whatever they might have a fear about John is trading. You can even see in here, which is absolutely ridiculous when I go in here. Look, I'm going to share this screen with you. So this is my Discord. Both of the links for these will be in the description below. And you can see in the Discord, here, I've just been doing this for years. Look, you can just keep going back. You just keep going back. Just keeps going back. And in this one, only I can chat in here. So all of the gold trades, I try my best to keep up with it, but all of them you can see in here. We're going all the way back September. We keep going. We keep going. Keep going. I called it Charlie and the Chocolate Factory, obviously based on the golden ticket and gold. So that's what this group is called. But only I chatted, only I chatted here, basically, and you can see straight away. So, and the majority of the time it's all just gold. There are sometimes I've put other variations of trades in there, but literally the majority of it's just gold. You can see. So even down to you can see how long ago I've been looking at imbalances as well and stuff like that. I've been doing this stuff. So it's all there, people. It's all there for people to see that I've been doing this, is what I'm trying to say. It's not something I'm just doing over one day or coming on YouTube and just chatting a bunch of rubbish. I've been doing this for years, people. So yeah.
OG.
Sorry, go ahead. Sorry, would you say that, mate?
Oh no, I said your OG.
Yeah, thank you very much, man. So yeah, the proof is in the pudding. You just you got to believe in it. You got to understand there's going to be some good times, there's going to be some bad times, people. I tell you that. I've never gone through just 100% of good times and no bad times. Like January's even been slow again for me. December was actually a bit better. December wasn't too bad, but January's been slow. There was 2 trades I was supposed to catch, but they just flew. They just ran off for me, so there's nothing I could do about that. At that time, I've found a way how to get into those trades that do run off now. I've done a bit of research on the weekend as well. But yeah, he just ran off with me. Right now, lucky enough, I got out of my trades that I was looking at, which was these 2 trades. Um, where was it? GBP Euro Ord. I'm so glad I got out of this bad boy. Woo! Woo! That's
Yeah.
damn, that is a big. I'm glad I got out of this trade. I'm so glad. I made the right call. I made the right call because this
Better
trade was
late than never.
supposed. Sorry, say that again, mate.
Better late than never.
Definitely so. So this trade was supposed to continue to buy, but obviously NFP week, the news is kicking. It's Euro, so the news is kicking in this pair first, as you can clearly see. So I knew what happened is that the trade was basically supposed to hold this area. And it did, it was holding this area, but there was 2 things that happened. I needed the odd news on Tuesday to be positive, sorry, to be negative. It was extremely positive. I think it was the Royal Bank of Australia. Boom. That's what started this move. Then on top of that, on Thursday, they now had the Euro Central Bank news, which again was negative, not positive. So that didn't help me. That was supposed to break up above these highs and go to the previous week's high. And then obviously both of those being in the opposite way they should be, boom, you can see what's happening now. Then I went to go check on last week Friday. I was like, hey, let me go check this news because this is when price is not doing the right thing because they start doing it again. Remember what I said? Consolidation. You get my point now, people. You can see it on this pair as well. They started doing it here. So I was like, hold on, something's not right. I went to go check next week's news events on the Friday, And then I saw obviously all of this crazy news here, basically. And I was like, no. I don't want to be in all of this. So as soon as the price started pulling up on Friday, I came out of it. So as it goes at the moment on my prop account, I'm currently negative by about 0.20. I think I made a bit of profits. I can't remember entirely. I've got to double check that. But maximum, if I didn't make no profits, then I'm only negative about 0.5% on my prop account. So it's not even that bad. It's about 0.5% or even less than 0.5%. I think it's like 0.35 because on a 250K account, it was $750. So it's even half, it's less than 0.5%. It's not even 0.5% what I'm talking about. So it's less anyway. So I'm pretty much less than probably about I'm like 0.30% negative. So that's cool. Nothing too mad. That's the whole month of January. So I'm not even stressing about that. Now my hypergraph accounts, I actually took NJ, which was working, and I closed that at just above break even. And then I was in this trade and GO'd. And then lucky enough, that's why I said I came back here. So I only took a small loss on this, nothing towards the loss I would even like to take in terms of risk to reward if you're taking trades. So we're still good on those accounts, even though it was a loss. I was in profit though. I was actually in profit. I never closed because obviously I was expecting it to go here. You got to see the trade play out. But yeah, obviously I made the right decision. You've got to always manage your trade. I'm showing people this to show people the reality of how trading works and stuff like that. And you're not always going to win every trade, and you've got to know how to think on your feet. And I had to think on my feet at this point, being I was in $3 million worth of prop capital and like almost over 10,000 live account as well. So I had to think on my damn feet. And lucky enough, I did because you understand. There you go. So yeah, that's that one there. But again, you're always going to get these certain situations happen sometime. Again, this is all for transparency. So people don't just think, oh yeah, I'm not winning all the time. Just like every trader, you have your wins, you have your losses, and you got to make tough calls, people. You've got to make tough calls. Yeah, I'm telling you, you've got to make tough calls. So, yeah, that's kind of really it there. Has anybody got any questions they want to ask me about Forex or anything in general? Obviously, I've given the gold analysis on what gold can do.
Whenever you take these trades, like what's your risk to reward? And how long you holding it for?
When I take these type of trades, I always, like I explained before, I think I did do it in the first Zoom, you can easily just put your take profit, wherever you decide to put your take profit, that's how you can start to now work out your risk to reward a bit better. So my take profit is always previous week's highs and lows. So if I'm entering this trade like this, let's just go down to the 4 hour to make it a bit easier. Yeah. And let's just say my entry was actually on this 1 hour break of structure. So let's make it proper easy for you. Yeah. Just like an idea of a trade. So it was actually on this 1 hour break on the Monday. Yeah. There was a 1 hour break here. I don't know why I can't see it here. Was it? I think it was, I'm sure it was there. Was it here? So I can't see. This is in the way. Okay, now it's here. There we go. Boom. So my entry was here. Okay. Right there. Let me do that. My entry was there. So if I already know my take profit is the previous week's high, which was up here, and there was a massive liquidity wick here, so I thought they would have gone to chase that, but hey, the market had other decisions to make. Boom. So right here is where I entered. Now, if I'm entering like this in the market, yeah, I will now be able to say, okay, if my entry is on that 1 hour break, yeah, and my take profit is here, let's just say straight away, boom.
Mhm.
This is how I'll be able to work out my trade setup like this. Now, of course, before the 1 hour break before the 1 hour break was there, I've already marked out a level. I'll show you after on the chart, but I've already marked out a level here for a possible level of support in the market. So I've said that the market shouldn't go no more than here. So obviously the break of structure happens as I'm there, but before that's happened, how do I work out the risk I want to take for the trade? So I'm not jumping at that point. Let's just say this is the level of support here as well, where my entry literally is. And my bottom level of my support is down here, something like that. I would be able to work out how much risk I want to take on this trade because I know that regardless what happens, I don't want the trade to go no lower than here. No lower, regardless of,
Got you. That's when
you
you gonna
understand?
see it's invalid. Yeah.
Do you get it? No, regardless of what happens, because I've already drawn. Remember, if you are in the VIP, I've already drawn out all the support resistance
Yeah, I'm
areas,
in there.
any fair value gaps, anything like I've already drawn all of that out for you. So, and you can literally see if it's at that point, I don't want it to go no lower than here. So this is how I'm working out just before I do give you the stop loss entry and take profit, because obviously that's when I've entered the trade. If you even want to understand it yourself, is wherever the support and resistance is, if I have to make it more clear, I will. that is where basically I'll put my theoretical stop loss, even though I don't have stop losses on my trade. I always explain that to you.
How you do that, brother? How you trade without a stop loss?
You just got to be able to trade long enough. Once you realize that it's all a game that they're doing, you'll be fine. It's all a game. Like I'll explain it to you again after, but let's just finish this point off here. So
Yeah,
imagine
I'm
this is
sorry,
the
I didn't mean to
entry.
cut you off.
No, that's cool, my bro. That's cool. So that is just the entry here. This is how I found my stop loss, and then obviously here's where the take profit would be. Do you get where I'm coming from? So I'm
Oh
able
yeah.
to, before I've even touched the trade in the week, I'm able to see how much risk to reward I can make. And this is why I said the previous week NZD-JPY is not my better trade, because I could already see theoretically that the risk to reward wasn't as good as Euro JPY and GBP JPY. So I didn't really want that trade. And lo and behold, it was the crap trade of all three of them. I was absolutely right. Do you get what I'm saying? So yeah,
Got you,
that's
brother.
how I do it. Just so if that makes sense to you for that question.
Yeah, for
Yeah,
understand.
yeah. So anyway, now boom. So what am I looking at now? Give me a second. Do. All right, cool. So yeah, the next one you said, how do I hold the trades? Yeah. All right, cool.
Yeah, with like without the stop loss, how you do that?
Cool. So once you've watched the market
Excuse me.
enough, and I've taken the time out to do that, everybody has their own right to do it and whatever they think is viable for them to spend the amount of time on the charts. I've dedicated my life to a certain way to be able to do that, and I'm able to just watch the chart sometimes, yeah. And I've done that. Even if I'm a dedicated person in anything I do. If I really love it in it, I'm dedicated. You know, everyone's different in their ways. So what I've done is been watching how the chart moves. And when you start to realize how structure works, this is why I said what I did with the path tool on gold is extremely important. I'm gonna keep saying it to you because you will start to laugh when you see they get to those areas, yeah. And when they get to these areas of break of structures, they start sniffing the area like this. So price action will start doing this. Give me a second. I'll show you exactly where it is as well. Price action will start. Let me get this thing is in the way of my tab. This zoom bar. Yeah, price action will start getting to break of structure areas and then it will start sniffing the areas. So here's an example. So let's go to the 4-hour chart right here. And on the 4-hour chart, I even made a joke of it in a free Telegram group. So in the 4-hour chart, there was a 4-hour break of structure here. Now look what they did for how many hours not to break this. Look at all of these candles here. Can you see how many times they rejected this area before doing what? Impulse. Can you see the impulse on this candle here? Do you see it? This gray candle.
Yeah, I
Yeah.
see.
This is when you start to pay attention to this, you start to realize how important structure is. Do you understand? When you see this point here, this is what this was the initial, let's call it the induction or whatever, the move for them to say, yeah, we're breaking out. Then what happened is because they already know this stuff. Don't think they don't. They knew this Euro central bank news was going to be negative, not positive. It was going to be, yeah, it was going to be negative, not positive. So once that happened, they went to go tap up one little liquidity spike here, yeah, which literally went for, where was it? Let me remove these drawings quickly. We can see it. Boom, boom, boom. Yeah, so it went for Monday's high, literally. It didn't even take out Monday's high. This is how evil they were. Didn't even take out Monday's high, the liquidity there. They were going for this here, but there was it wasn't this imbalance here. There was something else here on a lower time frame. But basically, they've managed to push themselves. So, yeah. Come on, my
Oh,
G.
mute your mic. Oh yeah, John. So I don't know who that
No,
is.
no, 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 no. I know who that was. So I'm not gonna call him out. So I know who you was. So I know. Yeah, I've done that. I've done that anyway, don't I? So I've muted it. All right, cool.
You cooking,
So
bro? Go ahead.
yeah, so basically you can see that price action was going close enough towards this liquidity here. So this is what I was paying attention to. Again, you can see how I'm speaking now. It might be a bit fast, but once you realize the chart's doing all of this, as it's moving price in your direction, you look at what's in front of you to say, where could a stop sign be? Literally, because
Okay.
all we care about is the trade moving with traffic flow. We want it to move nice, innit? Yeah. So you're going to be looking
Yeah.
at what could stop you. So I've seen, okay, yes, I can see that this is the Monday, the weekly high right now. Do you get it? Yeah. So
Yeah.
I'm like, cool. This is an opportunity for me to now be like, okay, I can hold this trade again. I don't have to worry about my stop loss. Even here, let me start this off. This was the previous, it wasn't the previous weekly low. Where's the weekly low? The weekly low was here. You see?
Hmm.
So when it's in draw, it was in drawdown at this point. I'm just trying to show you how my mind's thinking when I'm in a trade. It's in drawdown at this point because I've entered somewhere up here. Yeah, when it's gone down here. But I'm like, no, no, no. As long as they keep this 4 hour candle above this level, I'm good. So I'm good. I'm good.
Because
I'm
just weaken
good.
off, no candle
You see what I'm
closing.
saying? You see what's going on?
Mm.
The 4 hour time frame is my main time frame that I pay attention to. 4 hour, 1 hour mainly in terms of
Hey, bro.
immediate, faster price action. Do you understand? So I'm just seeing
Hmm.
how they're behaving and how they're breaking structure. Literally, if they break 1 hour structure, they might go on to break 4 hour structure in the opposite direction from my trade. And then what they did here, it was funny because GBP ORD, yeah, actually gave me a sign. Like, trust me, when you start watching the charts enough, guys and girls, you'll laugh. This is how I trade with no stop loss now because I'm confident because they don't just randomly do what you're seeing here. I've explained to you exactly why they're doing what they're doing on GBP ORD and Euro ORD. It's the news. The news. The news was completely against us. So you can't control that. We don't have control over the news. No matter how good of a trader you are, if the news is not in favor of what you're looking for, it's game over. You can't change the news analysis. Do you understand what I mean? You got
Yeah.
the forecast. So anyway, now look here. GBP Ord actually gave a telltale sign of this, but I was like, no, this is when you dismiss things sometimes. So GBP Ord actually broke 4 hour bearish structure here. So I was in both of these trades, you see. So this was your telltale sign. So when it did this spike back up into this supply on the 4 hour, that was when you should have got out your trade. Done. Let it go. Because it was telling you from this 4 hour break of structure here that the Euro news is more than likely going to be negative. Because remember what I showed you on Euro Ord, it is not easy for these people to break 4 hour structure, as you can see over here. This was a
Hmm.
4 hour high right here. Where is it? Here, basically, on this gray candle. Look, failed, failed, failed. Do you see what I'm saying? So
Yeah.
you can see it's not easy for them to do that. So as soon as they did this, you got to think of it this way. They're going to have to do a whole faffing around in a circle before they go again, which is here. Did they break it here? Look, this is when they broke it bullish. You see? Do you see the faffing around? So how many hours of
Yeah.
4 hour candles did you have to wait before they went bullish
Right.
again? And then now it's opened into this atrocity week. That's what we call this one here. This is the atrocity week. And then you can even see at the end of Friday, boom, now they've done it because it's going into this silly week here. But this is the only place where they broke 4 hour bearish was here. Where is it? Sorry, let me remove these drawings. It's moving a bit slow. Give me a second, people. Remove drawings. Let me make the chart bigger. And then here is the only place they broke 4 hour bearish structure. I'm going to move this to the green candle. Sorry, right there. Boom. So you see? So let's make this
Hmm.
smaller. Boom. There. Can you see? So even for them to go bearish again after that bullish, look how many hours it took. Do you understand? So as soon as this happened, what is that telling you? That's telling you, hey, boy, you're probably in a ride for ridiculousness right now for the next 4, 8, 12, 16 hours. Do you understand? And that's exactly what happened there. It took almost 24 hours. When was this? 2 a.m. Thursday, and it didn't break again to 2. So that's 12 hours they held you in this trade,
Wow.
basically. Was it 12 hours? Yeah, it was more than 12 hours, actually. Yeah, because it was 2 a.m. Yeah, so it went to 2 p.m. Yeah, it was more than that. It was like 16 hours or something like that. Something weird. Anyway, you can work out what you, but you get my point. It was basically a whole
Yeah.
long maneuver. So once you start understanding this, this is how I trade with no stop loss because I understand that the market has to respect structure. And when it doesn't respect structure and starts to go against you, you can still hold the trade, but you just have to be willing to see how structure is forming and to give you an analysis. And this is why I exited the trade when it started to go positive again, because I saw what did I see, guys and girls? Look right in front of you. Again, where is the 4 hour break of structure level? It's right here. This is where the 4 hour break of structure level is. You see here? And then what was it doing? I told the group, everyone, even the people on my high risk accounts and stuff like that, I told them straight away, I was like, listen, the Asian high is here. It seems like they're struggling to break this level, as we can see here. They obviously it wasn't going higher than here. Here's the Asian high, and the break of structure areas here, based on obviously this gray candle. Boom, even this gray candle here. These two, if it breaks any one of these with a full body closure, which it did here, that's where it can break. So I saw it went up here, and then I saw it failed at 10 o'clock. That means I have to wait another 4 hours just for them to break this level, and then they went back up here again, and it was around about I think 1 o'clock or something. Like I was like, listen, it doesn't. We've still got another hour to see if they're going to hold this or not. But if they don't, there's still 4 hour bearish and can sell again. I don't want to risk it because we're going back into less loss on the account. Do you understand? On any of the accounts. So I was just like, let me manage my trade and let me close it now because I've given them the chance. I gave them all week. And then this here was the John, let it go. As soon as they did that 4 hour break, then now let it go. Does that make sense what I said there to you? Yeah. You got to see, once
Yeah.
you pay attention to the flow of the breaks of structure, specifically use the 4 hour, because when they break 4 hour structure on any pair the wrong way, there's a chance that they're going to at least pull back. Even if they do your move, they can at least pull back and put you either in drawdown or take away some of your profits. Does that make sense? Yeah.
Yeah.
Cool. Has anybody else got any other questions as well or anything like that they want to know?
Thanks, John.
Yeah, that's all right, man. Anybody else got any other questions? We've already gone through the gold analysis, but it's very important for people to know. Stuff that I'm saying here right now is important stuff. Very what to know. Like, very important. No, that's no worries at all. That's no worries at all. No worries at all. Ayla.
Do you think the concept of supply and demand is actually valid due to the fact that liquidity sweeps and liquidity raids?
Yeah, 100%. 100%. It's 100% valid, I would say. Definitely. Always use supply demand or order blocks or fair value gaps or support and resistance. Those alone, if you master any one of them, however you choose to, you can see I variate between supply demand. I use supply demand, support and resistance, and fair value gaps. I've always kind of used. You can see through even the charts I showed you on my gold trades from 2 years ago, whatever you see support and resistance. I've always used between support resistance, supply demand, fair value gaps. And obviously breaks of structure create the supply and demand, literally. So I use those concepts and then I trade like that basically. Do you understand? That's how I
Mhm.
find it because the breaks of structure shows you when the market's creating higher highs, lower lows, lower highs, and higher lows, literally. So that's literally, yeah, what you do, literally.
Okay.
Yeah.
So,
Yeah, no problem at all. So I will just say why I'm here at the end of this Zoom call. If nobody has questions, if you do want to get into any of my prop firm management or anything like that, it's 100K accounts or 200K accounts, and it's a long-term thing for the prop accounts. Obviously, I'm not trying to get your account and blow your account sideways, so I'm not trying to pass your account in 1 week or 2 weeks or a month. This is a realistic way of trading, and you get to see how realistic trading can be if once you have the account with me, and you can see how I'm taking these trades again, even showing exactly what I said, trading with no stop loss. You get to see the ebbs and flows. You get to see the ups and downs as well. And maybe you can learn a thing or two. Maybe you get yourself a proper account. Unfortunately, at the same time as me, some people do pass it like that, but some people do blow their account as well. So you can see if you did blow your account, let's say you got two, you gave one to me, took one yourself, and you blew a proper account yourself, let's just say, you get to see maybe what did I do different from John, why I blew my account and John didn't blow that account. Do you understand what I'm saying? So you just get to also learn, and it's proof of me actually trading and not just being a person talking like I'm not trading. And then another one as well at the same time. You can also get yourself into the high risk trade copying. So therefore, I'm trying to take trades and trying to 100x the account quickly within a week, within 2 weeks, or whatever it takes. And then obviously we just withdraw the money and we split the profits basically between us. That's what I'm looking to do. So if you're interested in any of those services, let me know. For the trade copying, the better your balance is, the better it is because, you know, let's say I get a one-to-one trade, so 100x on your account or even 50% X on your account. If you obviously do give me the minimum, which is $100, you're not exactly going to make a lot of money on a profit split. But if you give me $500,000, yes, it's more risky. I'm not going to tell you, but if you're able to do that, it is a lot better when the profit splits come. Even if I come up with under expected results of what I wanted that week, I can still close a trade like I could have closed this trade. And this trade was actually on a 2K account was up £650. Do you understand? So that still would have been a profit split of like £300, literally. And it went there 3 times on this trade, but I wanted it to go to here, which would have gave me like 1,200 or 1,500. But hey, you know, it's trading, you know, he's going to win every trade, etc., etc., etc. So, yeah, that's kind of the idea of it. So if you're interested in any of that stuff, just give me a message after the Zoom call or whatever. and then we can push it forward. If you want to get yourself Neo as well, you can message me as well. That comes with the VIP and yeah, all the good stuff. And it comes with all the trades I take as well. And as I'm in these trades, as I'm in these said trades that I'm telling you, and what I'm explaining in the Zoom, I break this down in the Signal group as I take the trade. I'll tell you when I enter the trade, I'll tell you where my stop loss is, my theoretical stop loss. Obviously, again, I don't have mine, but I get some people want to be safe, so that's fair. So I put a stop loss there where I imagine it shouldn't go no lower than or higher than. And then my TP level is exactly where it is. Obviously, if the trade hits stop loss, I'm not going to be like, yes, this was a winner trade. I'll say the trade hit stop loss, but I still managed to make profit. Do you understand? I'll literally quote that as well. But yeah, you can get into that. That all comes with if you get into the Neo VIP VIP service and stuff like that. And like I said, Neo's going to be getting better and better. By the time I get the next update sorted, trust me, even then it's going to be, trust me, everyone's going to be running. And I'm just trying to get it better and better so we can get the expert advisor set into gear and it can just auto trade. But I'm not giving nobody a bunch of crap. So I find myself bannered on somebody's scam channel. He's a scammer. He's a scammer. No, thank you. I don't want to be known as some silly ass scammer. So until then, I'm still going to be updating it to get better and better, Neo. But it's out there now and it works perfectly fine. I just round this up. We had a I'll show you here, people. Last part of this Zoom for anyone that wasn't here before. You should be able to see my Telegram. You can see my Telegram. Yeah. You can see here, so just proof from my last YouTube video. This is all the trades I was giving out this week. So you can see here. So this week I've told everybody you can look at AUD CAD sell, AUD New Zealand sell, CAD CHF buy, CAD JPY buy, Euro AUD buy. Exactly how I explained in the video as well. It shows you how to take these trade setups, and there's even a course video that I made with the VIPs to show them, and it's on YouTube as well. Currently just taking one-to-ones based off all these trades. Again, it was a 77.7 win rate with buy and sell stops on these trades. So even actually taking human error out of trading, it actually is giving a better win rate if you just probably put buy and sell stops. I always explain to people the only reason I don't trade these on the proper accounts, I have to manually trade them. So obviously managing, even if it's buy and sell stops on all of the proper accounts I've got, it's a lot. But if you're a solo trader, and I'm going to do it myself just to prove it to people on one separate account, is take all of these trades. And I've had more than enough data now over 11 weeks to show you that these work. It's no problem. It's all there, guys and girls. It's all there. If you want to know how Neo or what Neo has as well, I posted this in the group. If anybody wants to see this, just let me know and I can forward it to them. But it tells you what Neo has in it, like a quick roundup, and how you could also use it. So all the things Neo does have in it. Boom, boom, boom. Just trying. You can see here I was in profit in Euro AUD and GBP AUD. I never closed the damn trade though. So note to yourself, people, as a lesson before taking the 750 loss on this account with all these entries. I was in almost 2,000 profit. So just that you know. Yeah, and you can see here, people. So yeah, just message me if you need me, man. Message me if you need me. I'm here. Yeah, let's get this cracking, man. Let's get this cracking. All right, cool. I'm gonna leave it there so it's not too long. Love you and leave you. And thank you very much for your time. Remember that sells on gold for now. If it changes, I'll update you. Yeah. Cool.
Thanks, brother.
All right, no worries. Take care, man. Take care.